Well, welcome to StockJumpers How to Trade a Stock Jump webinar today, folks. I just want to let you know my name's Andy. I'm the general manager here at StockJumpers and want to help get you familiar with some of the basics on how to trade a stock jumper and what to expect. There's a couple different styles of trades you may see, and it's good to know how to react to each one or what to do in each situation. Throughout this webinar, I just want you to know that if you have a question, please feel free to ask it via the question and answer tab at the top of your screen, and I'll be able to answer those as we go, or we'll have a question and answer session at the very end. But I think we've got everyone in that we're having today, so I'm going to go ahead and get started. So, like I said, we're going to go over some things. So some frequently asked questions: what is Stock Jumpers? Who are our members? What is a jump report? And how do you trade a jump, or an earnings jump as we do? So StockJumpers, we're a company that publishes out reports to our members that are day traders or people that are interested in becoming day traders, or someone who's an active trader and wants a higher edge of what they have. We release anywhere from 6 to 10 reports a week, and those are through SMS text messages or emails, etc. So we want to make sure that you have multiple avenues to get those reports. Who are our members? Like I said, we're looking for people who are already familiar with the market, may already be using some other systems right now, or someone who is looking for that next leg up or a new system to try out. But also we do have some people that are brand new to trading, and those are less of what we are looking for as our members, but we do have some trainings available for those too as well. What is a jump report? So a jump report is a earnings catalyst that we do. We work on earnings reports that companies report either before or after market. We release these reports anywhere from 24 hours to 4 hours or 3 hours before the event. We are in and out of a trade within about anywhere from 20 minutes or 5 minutes to 24 hours. The key to Stock Jumpers is rinse and repeat. Use your money, recycle it, go back into the next trade, because we are doing multiple trades a day and multiple trades per week. So it's a key not to be tied up, get your cash tied up. And how do you trade a jump? So there's many ways to trade it. Some people use an option side, some people use just the stocks. Not many ways. I guess those are the two main ways that people do it, but there's a lot of ways you can trade each style like that. Some people use stops, some people don't use stops. Some people will buy more than one position, they'll leverage more than one on a different one for options. So there's a lot of different ways that you can do this to make money and be successful. All right, so basically these are 5 different styles of trades that you may see as stock jumpers. So not every jump is perfect. We would love that, but they don't always turn out to be correct. But it's learning how to understand how a trade's happening and to be able to be a nimble trader and take advantage of the profits where you're at right now, or know when to cut a loser, or know when to stay in and wait till the next morning if it's nothing's happening. So we have a whipsaw, we have what we call a slow pokey, and a total bomb, a flatliner, and a perfect trade. So we're going to go through those, and I think we have some slides based on each one. So here's one we did, which was Micron Technologies. This is what we consider a whipsaw. So on the next slide right here, we have a market close. So this was reporting after market close. Micron Technologies, the close was $24.02. So if you notice right at the close, we had a dip down and we had an up spike, and we gave a signal of a drop. So most people would have bought either right at the dip or right at close, or might have bought earlier in the day. So we don't really know when most people would have bought, but this gives an example of what it looks like. So here's 10 to 15 minutes, 5 to 10 minutes after the release. So what happened is this stock shot up about 2 or 3%, maybe 4, just sat right there, kind of trended down a little bit. So the key to this is knowing what's really happening or not. So if it shoots up, yes, sometimes you might want to get out right away, but it also, if you see right there it dropped, all the way back down, pretty low too, but shot back up. So being able to execute a trade within that, probably not realistic, but this is kind of, as the trade goes, you need to be able to, stick to a system, and we'll go over those in some later webinars, but stick to a system and trade it to that system and not let your emotions get involved. So this is just an example of, like I said, some people will panic, some people may close. It's just, what do? Do you go into your stop because it shot up and we said it was going to go down? Next slide, if you look right here, within 20 minutes, I want to say, I think it was 20 minutes right over here, it dropped 10% initially, and then throughout the rest of the day it dropped 19, and I think it opened the next morning at about, or through the rest of the days, if you would have held on, some people do, some people don't, but if you would have held on, I think it resulted in a 21 or 22% jump zone. So I mean, something that looked like it might have been not great right as it started over here, but then shot all the way down and did exactly what we said. So that's a good example of a whipsaw. Sometimes a whipsaw might even go through your stop really fast. So those are some key elements to know. Well, how do you adjust your stops? Well, it comes down to what you're comfortable with. From our reporting, we normally see that stuff does not go above 5 or 6%, and then come back down. Rarely do we ever have a jump that will go beyond 5 or 6% and then retrace back or whipsaw back down to its original plan. Here's another one right here. We have our slow pokey, and I think it's apogee is how you pronounce it. It's APOG, and this was an example of a trade we had this week too. We gave you an up arrow. We had a market close at $61, so whether you bought below or earlier in the day, because it was ticking up through the day, so you might have gained another couple percent as it was going up throughout the day. The next morning, it dropped fast, or it dropped its forecast, so I guess it closed up, but we gave you a down arrow. So the next morning it dropped as forecasted, so those are a slow pokey where it kind of didn't do anything after close, as I'm not trying to go back too much in the slides, but if you look at the close right here and the candles, there's not much activity going on at all. And then we go to the next day and just a complete drop right at market open. So I mean, some of these ones, like I said, will not go in very much. They'll kind of be slow. You might have zero activity. It really depends on how much they're traded. We like to stick to stocks that are traded over 1 million shares a day, especially during earnings events. That increases a lot because there's a lot of traders out there that focus on the volatility in the market, and this is something that we can jump onto. Here's and we also in this one said there would be a chance for a retrace, and it did exactly what we said, so an upswing later. So some people might have sold and then watched it start to go back up, and you might have gained about another 3 or 4% as it traced right back up. So a great opportunity to show how you can play two sides of the trade as you get to know how to trade more, or if you're already a skilled trader, we try to give you pretty precise information on it's going to drop, and then there is a chance for a retrace at the bottom. And that's exactly like this slide shows right here. So we showed it's a drop down, and this is the report for apogee, the one we just did. A down arrow and an up arrow, and it says StockJumpers analysis. The apogee is a solid long-term investment. Market reaction favors an initial short and a rebound after the dip. A nimble trader may win both moves going long after the price drops. So I mean, if we go back to that slide right here, that trade could have not been more perfect. It was slow, so some people may have been nervous, but the next morning when you have an initial drop, I mean, that's instant profit. You close your trade. And you don't have to take the next side, but let's say you did take the next side, so you're just turning that jump into almost doubling, because if you look, it almost swing all the way back up to points of where you were the day before close. So I mean, what a great opportunity to double the jump with one report. So, but as we go, you'll learn more about how to do that. And then if you look right here, also being nimble, we don't go this far into our reporting, but that jump, it went up and then it dropped again. So it's not just getting in and holding on, it's kind of getting in and making sure that you're watching it on those secondary parts. And here's an example of a flatliner. We had Yahoo, and this one was one where it kind of didn't really do much at all. I'm pretty sure we had this one up. I think we had it up or down. I think our slide's coming next, but we had a down drop really fast, an up spike again, and then it kind of didn't do much. It really floated in between that 2% jump zone. So I mean, these are jumps where, you know, it really didn't hit a stop loss, it really didn't hit a take profit. So how do you know when to get out? Well, these are things of either being a nimble trader or just knowing, hey, I'm either going to take a loss right now and be okay with it, but I'm not going to, or I'm going to take a small profit and be okay with it too. The key to these things is not getting too caught up in the emotions on that, so just going through it and then going to the next trade. So you want to make sure that you commit to what you're going to do and then do it and then go to the next trade and rinse and repeat. So here's a bomb. These ones we don't like. Of course, this was Sonic. It was a great jump, though. What happened was we had it up, but I mean, if you look at that immediately dropped right at close. You can see the huge spike in volume down at the bottom where it had just a huge amount of trade. The nice thing about these trades is if you see it wasn't a huge gap down, so you were able to get out. It did go down to 8%, but if you look right in here, you were able to get out about probably that 5 or 6% zone, just where that stop loss would have triggered. So a good opportunity, a good example of showing if you had a stop, it would have been triggered, and then also also shows the inverse effect that was a great jump. So these are ones we don't like, so at least to give you an ability to get out, but I mean, dang, leaving 8% on the table is not fun. Here's an example of one of our favorite jumps. This one is Yelp, a perfect jump for a huge amount. It also had a tiny little bit of an up spike right at close on Yelp, and as the day or the trade happened 10 minutes later, I mean, huge gap down 10 minutes later, and I want to say the total jump zone on that one ended up being about 22% drop. I mean, imagine 10 minutes later making 22%. I don't know many people that can do that, or many systems out there that are giving you the ability to make that much profit that fast. So it's great that you're here for this and learning how to do that. So another key to this is an exit strategy. The goal is profit, recycle your capital, be in cash every Friday. So the key to this is we want to make sure that you are, you know, rinse and repeat. You're getting in, you're getting out, and you're back in cash. If you're holding trades over, you never know what's going to happen. You don't know what's going to do, and that's the nice thing about StockJump is we give you that edge, we give you that information, and let you know, hey, this is what you need to do. Go ahead and execute it, and you see our performance, and you'll see our history, and shows that if you stick to our system, it might not be good every single day, but numbers always win. I think last month we had about a 98% jump zone, which was, I mean, phenomenal. If you can make if the potential's there for 98% positive income, that's amazing. There's hedge funds out there that don't even do that in 10 years. So that just gives you an example of following the system and sticking to it. You have the ability to make just tons of money, and it's pretty easy. But other than that, that was it for the webinar today. So I want to be able to open it up for questions, and please just go ahead and shoot any questions you have out there. We want to make sure that we're here to help you guys. We can do as much as we can to answer some questions, but we can't tell you how to trade it, but we are working on some options of doing that for you. So I'm going to go ahead and open up the floor or the mic. So if anyone wants to go ahead and queue in, just please go ahead and ask those questions through the mic, or go in and ask them through the question and answers. All right, so Kevin, I see your question, when do you enter a trade? Once again, it kind of goes back to where you want to be at the time you get the report. Some people want to enter it immediately, some people don't. The one nice thing about entering a trade is if you look at all the numbers that I put out there for anybody, we always go off of the closed price. So if the stock closes at $24, I'm going to say the gain was from $24. So if you entered the stock at 23 because it was moving up and you caught it on the up, on the lower part, you might have made 3% more than anyone else. So entering the trade, a lot of people that we see enter it actually very close to close. You might miss out on 2% up, but at the same time is you might take bigger of a loss, you might take less of a loss, you might take more of a gain. It really just comes down to your personal strategy. There's no wrong place to enter a trade because most of the action happens after the close. You're not missing out on anything during the day usually.
Yeah, and actually just a quick comment on that. Just for the sake of the psychology of the trade, having a mechanical system is generally better. So let's just say you get your jump report, 3 or 4 hours before market close, and your mechanical system is to enter 30 minutes before market closes. And regardless of really where the market's at that time, that's just your mechanical system, and you take your losses and you take your wins, and at the end of the month you end up with whatever your gain or your loss is. That's one way to look at it. Another way, a lot of the traders that are professional traders, they'll watch it. They'll watch every tick and look at what the opportunity is. It's almost like the jump report provides some background information for them. It's kind of like a backstop, but they're still going to trade it how they normally trade or what their own personal feelings are. So as Andy suggested, it's a personal thing. We don't really have any specific advice on it other than if you were a new trader and you were doing this and you wanted to experiment, whether that was on a virtual basis or you wanted to trade real money hopefully trade very small amounts initially, I would suggest just going in a half an hour before market close. Whether that's even a before market opens reporter, or if that's an after market closes reporter, you still have to enter your order generally before market closes, the day before, if it's a before market open. So I don't know if that answers your question or not. Another question just came in. Somebody asked, any guidance on exiting a loser trade, especially when you don't know if it's a whipsaw or just a loser? Kind of answered that, meaning it's a personal choice. I think you can kind of, some of these will retrace. The very next day. A good example was CAMP, which just traded. We just announced yesterday, or they announced yesterday afternoon, and today the jump I think was around 11%. Is that right, Andy?
It hit 12, and that kind of goes in line with one of the other people's comments in here. It's when's a good stop loss to get out at, or when do you bail? And a lot, like he's saying, a lot of the retraces, we actually get a lot more retrace than you would think, especially in the very beginning part. Today's trade, for instance, was one where it went up and it kind of thought maybe it would retrace a little bit. You kind of hung on, and then it kind of just settled out around the 5% range. And at that point, I would say you pull out. Yesterday's trade, though, however, went down immediately, whipsawed, I think, about 6%. And then all this throughout the entire aftermarket hours just kept climbing and climbing and climbing and climbing and climbing. And then at the end of the open of market today, it was up 11%. And so, it comes down to your own safety mechanism. So if you're someone who uses stops, you would have lost 5%. If you're someone who would have not used stops, you would have made 12% today. So that's, it kind of goes in line with your own personal trading strategy and how closely you're watching the trades. This is not something where you set it and forget it. You kind of need to be active in it.
Yeah, and I think that the other thing too is we're providing really the analysis of the jump and the direction of the jump, which could be that it requires it to take to be immediate, or it might be that it takes the next day before it'll actually pay, the jump will actually occur. So each trader is going to have to kind of really get a sense of the trade itself anyway, and kind of look at all the other elements that go into the trade. It's just one of the trading elements.
Going back out.
Hello?
I think it just went back. No.
Okay.
If anyone has a question, I'm going to go ahead and put all the blinds on mute. So if anyone has a question, they can just chat in about it then for now.
Yeah, let's do that, because otherwise it'll be too, we won't be able to hear the... Hello? Can you hear me? Okay.
You are now muted.
Any other questions?
All right, so then it looks like we have another question for do you provide stock analysis, and is that it? Right now, yes, we only do for stocks. I'm guessing you're asking that question in regards to just trading. The amount of work that goes into one report is a lot, and especially now that we do multiple a day, we really don't have the time to go into more than that at the time right now.
I think the question also is whether or not we're doing other event-based things such as futures, you know, like for example, what's happening in Greece right now. It would be nice to have some analysis on that in terms of, you know, trading the S&P 500 or trading futures or Forex or things of that nature. This is an area that we will be going into. We can use our technology for that. However, the main focus right now, probably 90% of our focus is on earnings reporters and other major catalyst events. So for example, a major merger acquisition or a biotech company that's about to get FDA approval. When we get information on that, we can verify the trajectory, and we will be doing more of those types of projects. However, the focus right now, or the bread and butter focus, let's put it that way, is on earnings reporters. Hopefully that answers that question. Anything else? I think that's it, Andy, unless you have any other comments that you want to make about accessing reports, troubleshooting issues, some technical issues there.
Yes, I would open it up to see if anyone's having trouble. I know that a little bit of this is new to people. The first time getting logged in is a little confusing, and we want to make sure that it's easy and you're not having any trouble logging in. So if anyone has any just technical questions, that's for that. And then it looks like we have one other question. So go ahead with your question if you want to chat that in or message that in, whatever you'd like. And if anyone has a question they don't want to ask in the chat, you're more than welcome to ask a private question to us. It says there's a question marker up at the top of the window. It says ask a question. That goes directly to us and no one else sees it. So just in case anyone wants to ask a question without putting it in the chat room, we can answer them that way as well.
Anyone have any questions regarding access to the website, downloading reports? Is everyone getting their reports on time?
On the amount of money you should be making per using per trade, I think the biggest thing is enough that you feel comfortable with. Again, that's a hard one to answer. I know that.
It's all about the percentage.
Yeah, I guess it would be you want to be using enough to make it worth your while. I mean, if you're trading with $1,000, this isn't your game. I mean, this is not that you're not going to be making enough money to really make it worth your while. And then Kevin, it looks like accessing 1 second jump report in a day is tricky. Looks like one should sign in and then stay and click for the second one. We were thinking about doing that, Ken. It looks like some people were not knowing that you could scroll down. We send out a link every single time. So I mean, we can look into doing something to try to put more than one on a page. We can look into doing that if that's what you're asking. And I think that was about it for today. I don't know if anyone else had any last questions.
Yeah, this will actually be available. We'll post this on the website. We're going to do one of these a week, so those of you that want to come back in, you're welcome to check on the events calendar, and we'll be doing these regularly on different topics and more specific more specifics about different trading scenarios and ways to be able to do this. We want to be able to provide as much support as possible, and we want everyone to be as successful as possible doing this. This is not a 100% sure thing. There's risk involved. However, the numbers can work, and you can make a ton of money if you follow this and are able to, to trade it using your own, trading capabilities. So.
Looks like, Angelo, that's something that I've been working on. I don't know why, for some reason, some of my alerts are going through and not. I actually am in the process of working on that right now. I was troubleshooting that today a little bit with our tech department, figuring out why it's working and sometimes it doesn't. So I apologize about that. I'm working on getting it so it's working seamlessly. And then looks like level 2, we do not have a trial period for that. That is going to be a second membership tier level that would be done probably once a week. Maybe we haven't really decided the full capabilities or the full amount of time we want to put into that.
Yeah, we're still actually testing what the capability is, and the problem is a person really has to be able to be in the information loop. So it's because the information is so fast, you have to be able to react to it within a 15-minute time frame. So a lot of the level 2 analysis will be tracking the trade, whether or not it's going to bounce, whether it's a continuation trade, and so what we're trying to do is sort out really the technical elements of how you're going to, we'll put a trading room together or something where if you're going to sign up and be a level 2 trader and you're going to trade an event, that's going to be information that's going to be coming to you like every 30 minutes or so. 15 to 30 minutes. So we're trying to figure out exactly how we're going to do that. It may be that it's just a text SMS messaging thing, or it might be that you're actually logging in real time, having access to, to the information. So it'll be like an information feed, basically. So we'll be announcing more on that probably in the next 30 days.
And if anyone doesn't have any other questions, I want to thank everyone for joining us today. And once again, if anyone has any offline questions, please feel free to email myself or Dane. It's just both of our first names. So mine is Andy@StockJumpers.com or Dane@StockJumpers.com, or you can message our support team or our jump team, as we call them, and that is team or jump@StockJumpers.com. So, or it's team@StockJumpers.com and then support@StockJumpers.com. So I think, oh yes, always feel free to call us. So
yeah, thank you all for coming.
Yeah.
To be continued.
Yeah. Everyone have a great day and enjoy your holiday weekend.
Thank you. Bye.